Hey everyone, it's Albert Ramirez with the Ramirez team, and I'm here with an awesome guest today, Jennifer Morris with
All Western Mortgage.
Hi Jennifer, thanks for being here with us today.
Absolutely.
So we have a couple of questions that we get asked a lot, and Jennifer's here to break those down. But one thing that I wanted to ask her that I get a lot of interest on is, what is the most important question I can ask my lender?
So I think in today's market, the most important question with the competitiveness of the market, there's a lot of lenders are out there like chomping at the bit to get the buyers. So what I would tell you, the best thing you can ask me is, why should you use me?
It's a great question.
And I would tell you, because as a buyer, you're going to have several choices to choose lenders. And why choose me? To make sure you're making the right decision on which lender to choose. So I would tell you, education, knowledge, and communication is what I offer my clients.
Wow.
And why is that important? Because you can get so many lenders, they're going to pre-qualify you for what loan they think you should get versus what's really best for your financial decision and what's
Absolutely.
best for you. The other part is, they can pre-approve you and maybe not have looked through all your income documents, your credit file, and just said, hey, you're pre-approved real quick, and you go to buy a house, and next thing you know, they haven't really done their homework and got you pre-approved.
We've had that issue with lenders. We've gotten people in the door, they've gotten second. It's always great to get a second opinion. Second opinion on your real estate agent, second opinion on your lender. That way you can compare. We always want you to have the best information to make the best decision for your family, like Jennifer's saying here. And so we've had that where we had buyers come in, we get them pre-qualified, we shoot them over to Jennifer, they choose another lender, and then we start the process, and then the lender goes halfway through the process, whoa, I don't have this, I don't have that. Well, you sent us a pre-approval. Like you should have had all this already. So we don't have that issue with Jennifer Morris.
Hopefully not. Know that we do take a lot of pride in making sure that the pre-approval we issue you is set in stone. The other thing that we do is, we can do a pre-approval pretty quick, but we do go ahead and fully underwrite the file. So when you are out looking for houses, there's no guesswork. All you need is a property at that point. Yes, we're going to put you through the ringer at the very beginning. We're going to collect your income documents. We're going to ask for everything but your blood type. But we're going to do it pretty quick and painless and do that pretty easily. So that way, when you go to put money down on a house, you're not worried about, am I losing any money? Even the $100 option fee, am I losing that $100? Because not everybody has $100 to lose.
Yeah.
We want to make sure that when you put an offer in, it is pretty set in stone on your financial backing that we can get this loan closed.
That's great. So a couple of other things that come up. So saying all that, it sounds like, man, it's going to be a pretty intense process starting out. We don't want you to be scared. We don't want you to fear the application and the origination process. So in saying that, there's a lot of documents and things that you're going to bring initially that Jennifer's going to ask for, that her team's going to ask you for. Just proof of funds, things like that, bank statements. They're going to run a credit report for you, but they're going to get you lined out so that you know where you stand immediately in the process. And if we're ready to go and the budget's in place and she says, hey, they're qualified, they're ready for this amount, we're going to start looking immediately. If not, she'll put you on a plan and say, hey, we're 3 months out, we're 6 months out. There's a couple of things that we're going to have to do to get you cleaned up. But she's really good at lining those things out, telling you what those things are, and then getting you set up for success in the next 3 to 6 months. What are some of those things that you do that you help them out with when they're not ready?
When they're not ready, we actually go through your credit report and see what you need to improve on, whether it's pay down some credit cards, get a new credit card, believe it or not. That will sometimes boost your score if you don't have a lot of credit, or take care of some old collections, which is not normally a path we take, but it's mostly just getting some time and cleaning up some old credit and establishing some new credit. Or the biggest thing is paying down some credit card bills, which a lot of people have. And we just get that. We can come up with a formula that says, hey, here's what you can do in 3 months, here's what you can do in 6 months, here's what you can do in a month. And people think, oh, my credit score is terrible, I can't do that. But there's never a, we can't do it. Hey, here's what we can do, here's how long we think it's going to take. The other part is jobs. You know, if there's a new job situation, whether it's newly self-employed or commission or a job altogether, we can give you a time frame of, you need to be on your job this long, or you need to file your tax returns. Just whatever it takes to get you, and we give you a time frame, because it's really never a no for us, because we are your lender for life. That's what we want to be. So it's, when can we get you in a home? Because I know no one likes to hear no. I definitely don't like to hear no.
No, that's not something that Jennifer or I do very well with, is no. So we want to make sure that you're getting yeses. And I love what you said. It's not a matter of if we can't get you in a home, it's a matter of how and when. And that's really cool. So let's get you lined up, let's get a plan together, and let's start the process now so that you know and you're aware today and not 6 months from now. Hey, I've got to start doing this stuff and cleaning some things up. So that's great. Okay, so the next thing is all that's happening, and people are like, well, what are these fees? What's going on here? Well, there's something called an origination fee because y'all do a lot of work.
We do.
Right? Okay, so tell us a little bit about that.
So the origination fee, there's a couple of different things. You're going to hear in this mortgage process, you're going to hear origination fee and you're going to hear discount points. They're two different things. Origination fee are the fees that the lender charges to do the loan. Most everybody is very competitive on what those are. Those are different services that we charge, like an underwriting or a processing fee, and every lender pretty much, for the most part, charges the same amount. Some are different, some are a little bit less, some are a little bit more, but that's our fee to do the loan. The other thing that we charge is called a discount point, and that's where you get into what the interest, that affects your interest rate, what the interest rate is versus how much it costs to get that interest rate. And we know that fluctuates quite a bit with the way rates are right now.
Yeah, and rates is the scary word in our season, isn't it?
It is. So a little bit about interest rates. We're looking at 6.5% to 7% right now, which isn't terrible. It's really not. We thought it was going to be about 8% by right now, and it's not. It's about 6.5%, 7%. We are hearing in this in 2023, toward the middle toward end of fourth quarter, we are going to start seeing them trickle back down, or at least stabilize a little bit. We're not
Great
having to
news.
worry about them coming back up, but
Great
I
news.
think in the next near future, I don't know if it'll be in 2023, but we are looking back in the fives, maybe high fours, but that's what we're hearing. There's no guarantee on that by any means, but
Yeah.
that is kind of what we're predicting with the
So,
market.
so great news. Looking forward here in the next several months, 6 months, 12 months. So that's something you say this, and I've heard you say it several times. Marry the house, date the interest rate.
Right.
But take the fear out of this interest rate right now. Historically, this is pretty normal. You know, we were all spoiled with the twos and the threes.
Absolutely.
But this is normal. And so where does that put buyers historically when purchasing a home? That way they can just look at things reasonably and say, hey, this isn't just outlandish interest rates. This is what we've been dealing with.
Right. I started in the business in 91, and I know that's a long time ago, but I was doing refinances from the day I got in and we were refinancing into the 8 and 9%.
Wow.
Believe it or not.
Did you hear that?
That was, everybody was refinancing because rates had dropped to 8 to 9%. So we've seen it all. You know, they've highs and lows. This too, will we ever see the twos and the threes again? We don't know. But I think that was an exception, not the norm. But I do think the fives to sevens are a very, very good interest rate for the over a 30-year span of the time you're in your home.
Wow, absolutely. And I think that's a really balanced ratio. Is when we're between 5 and 7, it's good for everyone. Right? The market's a little more balanced. Guess what, buyers? You have more time to look at homes that are on the market right now. We can take our time. We can look at them 2 or 3 times right now, which hasn't been the case over the last 2 years. So make some good decisions. Take your time a little more than we have been able to. Well, that's good. So the next thing is, okay, we've done all the initial, the origination fees, and now we're getting to the closing table and the buyer looks and says, whoa, what is all this closing cost? Why am I paying this closing cost? Which we would negotiate initially in the first part of the contract as well, but speak a little to that.
So closing costs, they are a little overwhelming, and they've increased just as everything else in the business and the industry have increased. And in the world right now, everything has increased. So have closing costs. But
Eggs.
yes, eggs. But when I tell you your closing costs are XYZ, that is the all-in be done. This is everybody's fee. This is not, hey, this is just my origination fee. This is everybody's fees. This is the lender's fees. This is the appraisal fee. This is the title company fee. This is your taxes, your insurance, your survey, everything you could possibly need to pay for this mortgage, other than down payment, is involved in your closing costs. So there's so many third parties involved that we use. We include it all in one, so there's no surprises when you go to closing.
Okay, that's good. And a lot of times in the previous years, that wasn't happening where sellers or lenders were having to give credits or helping with closing costs. It was a seller's market. Now what we're seeing is that shift back to a more balanced and even almost a buyer's market at times, depending on the property, depending on the area. So what we're able to do is we're able to negotiate closing costs or build, even new construction, builders are starting to give credits back So make sure you take advantage of that right now. And lenders are giving incentives as well. And so we're going to do another segment on that. We're going to break down 2-1 buy downs and some lender credits as well. So stay tuned for that in the future. So Jennifer, what would you say in closing here? If someone's contacting you, what's the biggest hurdle that you have to overcome generally with a new buyer?
New buyer is getting the trust factor there. Okay. If they're calling me, they have a little bit of trust because their agent has probably sent them to me. At that point, I want to say, hey, I want you to know I have your best interest. I'm not here just to do a loan. I am here to help you get into a house on the best program that fits your budget and your family's budget. And also want to know, again, we talk about the lenders, the experience, the knowledge, and how many lenders are out there. It's the communication, which I think is huge. I want you to know you're going to hear from me and my team. Your agents are going to be updated. You're going to call me and I'm going to answer the phone. And I think that's huge. There's so many lenders nowadays that don't answer the phone and don't communicate. They don't hear back from their lender. And guys, we're here to do business and help you get into a home. And we want your trust factor is the most important thing with us. We want you to trust us, that you know we keep you communicated, where you know what's going on with your loan, and you say, hey, Jen's got this. I'm not worried about it. When do I go close? What do you need? Okay, I'll get it to you. And I think that's huge, important, that the trust factor and us communicating with the buyer and the buyer responding, because we can't do this process without your assistance.
Yeah, no, that's huge. And so that's why Jennifer's on our team. We use her we're on her team. We work together really well, along with our preferred title company, McKnight Title. We just have a solid team. Everyone involved in the transaction truly cares about your best interest and how can we service you at the highest level. So we want you to get to know us, and we want you to trust us because we have your back. So great information today. If you liked it, leave a comment or just message us, DM us, call us to set up an appointment or a free consultation so we can get you lined up with Jennifer and you can start the loan process. We'll talk to you soon.